We found an unusual trade on Meta stock options worth $132 million on the last trading day. And this unusual trade was actually being traded by the same wealthy investor who we have been following on this channel in our previous Meta video analysis. So if you're subscribed to our channel, you know that our last Meta analysis was last month when we shared our analysis of unusual option activity being made on May 23rd on this day. And we published this unusual trade in this video here, where we asked the question, will Meta fill the gap? This is the gap. And we were trading halfway in the gap. And clearly we have now filled the gap because we are trading above it now. So this analysis proved to be very successful and profitable. So we'll put a link at the top. If you missed it, make sure to subscribe. Hit the bell icon so you don't miss out on these profitable opportunities. How do we know this is profitable? Because if we look back at these call options that we analyzed, you can see on the profit loss graph here, these August 16 options, 440 strike calls that this wealthy investor is trading. You can see the profit now, a positive $2,244 per trade or contract. So is this wealthy investor still bullish on Meta or bearish now? Well, let's find out by analyzing the new data of unusual option activity to continue tracking this wealthy investor so we can continue to make money while the rich get richer on Wall Street. Because as we all know, the rich have more access to resources, including leaked insider information, to make better financial decisions. So without further ado, let's dive into the data. And keep in mind that the data on Meta is actually not as strong as other stocks that the wealthy investors trade, because on a daily basis, there are bullish and bearish trades that the wealthy investors are trading. So if you want access to the higher chance of profit trades that the wealthy investors are making with stronger data, then make sure to go to our website. We'll put a link at the top here where we share their trades and also option strategies to reduce risk while increasing profits. Now, as you can see on the option time and sales tape, the new data, June 20th, over here, we can see these August 16 options being traded at the 440 strike calls, the same ones that we had previously analyzed. And we can see that they are selling to take profits. And we can see the new trade here at the 470 strike calls. And when we calculate the price, you can see the price that they paid, $51.84 for these 470 strike calls. We multiply by 100 since this is options pricing. One option represents 100 shares, so we multiply by 100. So each of these call options cost $5,184, and since there was 25,500 contracts, this trade is $132 million. So a very significant amount of capital being traded on Meta. Now, is this bullish or bearish? Because that's also very important, not just the value of the trade. So we have to take a deeper look at the data now. And that is what we do. We look at every piece of information and we find out what these wealthy investors are doing. And when we see the August 16 options that were being traded on the last trading day of June 20th, we can see these August 16 options for the 440 strike calls, open interest of 22,000 and a volume of 22,000. And what they're doing is closing out of this trade to take profits and rolling to a higher strike price. We can see here the 25,000 volume greater than the open interest of 826 at the 470 strike calls. And so we have to analyze this type of data to find out, are these opening trades or closing trades? And based on that, we can also find out, are they buying or selling as we analyze more of this data. And so as you can see here, for the August 16 options, we are also in this same position for the 470 strike calls. This is our position over here showing up, where based on our analysis, they are buying these 470 strike calls to open. And as we had just calculated, they were buying them for 51.84 each. And so when we analyze this on the profit loss graph, we can see here, as the price of Meta goes up, these call options become profitable. If it goes down, they become a loss. And that is why you can see the max loss on the blue line here is a negative 5,184 if Meta drops considerably down. Okay, because each of these call options are worth that much. That is the maximum loss on this trade. And we can also see from the Greeks that this is a bullish long trade because the delta is positive. Okay, now keep in mind, trading options is risky. You can see the theta here of negative 30. There is a time decay on these call options, so it will decay in value. You can see this purple line, which represents the current date, dropping down lower. Okay, so the value is going down from this zero break even line. Okay, so the break even on this trade is over here at expiration, so above $520 per share of Meta, because the x-axis represents the share price of Meta, which is currently trading right here at about $500 per share. Okay, so based on this analysis, this wealthy investor is still bullish on Meta and locking in profits and rolling their options to a higher strike price. So we are also staying bullish on Meta. But again, as we mentioned earlier, Meta is a lower chance of profit trade because of the weak data that it provides from wealthy investors that are going bearish and bullish on a daily basis. If you are interested in the higher chance of profit trades where there's just a few wealthy investors trading it, where we can get more accurate, stronger data to predict stock price movements, then make sure to go to our website. And let us know in the comments below, do you think Meta will continue to go up higher? Will it break above that $520 break-even level that these call options we had just analyzed were showing? As usual, please smash the like button, subscribe if you haven't. Take care and have a great day.